All right, let's get started. Today is Tuesday, September 9th, 2025, and let's take a look at the market and see what's happening here. The E-mini S&Ps are up by 0.16%, with the VIX futures down 0.49%. If we sort this by net change, we can see Amazon is up just over 1%, DIA is up almost 0.5%, with Apple down 1.87% and IWM down 0.5%. Let's take a look at our activity tab to see what happened since the last episode. We had Chipotle Mexican Grill was a fill today on a short put. So I traded this one before recording this episode. I wanted to get long Chipotle. Let's go ahead and hop in. IBM, there's nothing really else here to show. This IBM trade was yesterday during our episode, so nothing to show there. I'm going to go look at the positions here and really show you why I wanted to get long Chipotle. So this was our position that we've had on. This was a vertical short put spread that we put on. And let's go to the analysis tab. You can see that where we're trading way outside of our long put here in the short put spread. So this position really kind of went against us. And we didn't want to do that. That happens sometimes. So let's go take a look at the chart. Well, before we do that, let's look at the options chain here. So we put this position on 728. 728. So if we go look at the chart, we can see here, let's go find 728. We were trading, we had just dropped. So we were right here when we put this position on. And so we were outside of the 3 ATR. So we thought, this looks like a good time to put a position on and get long. And it usually is. However, what we found was that this underlying bumped up a little bit and then continued down, came up slightly and continued down. We have this long string of down days here. We are again trading at this 3 ATR lower bound here. And so we were able to roll the short put spread out. We paid 3 pennies to roll it out, which is not too bad on 822. And so we have an open position here for the short put spread, but then we also opened a short put because we kind of really wanted to get long. And there's a chance that I think we might lose on this short put spread. And with Chipotle making new lows, also breaking that 3 ATR boundary again, I just thought it was a really good time to get long again and on a new trade, just a naked short put, and try to hopefully break even on Chipotle, at least. Like, that's kind of the goal. So even though our short put spread might not pan out, because if we get to 21 DTE, which we're at, 38 DTE right now, when we get to 21 DTE, which is another 17 days, if we haven't turned this short put spread around, we might not be able to roll it out for a credit. And I don't really want to roll it out again for another debit. So really the short put is in an effort to try to kind of like save the day. Because now let's take a look at this short put spread. What does it do? It's a 37.5 strike. So if we go back to the chart here, 37.5 strike is right here. So we'd have to come down some more in Chipotle. And then if we take that 37.5 and subtract the credit that we received, so let's pop open a calculator here, 37.5 minus, what did we get? 0.8 on this one. So we'd have to get to 36.7 really to not even break even on that one. 36.7 puts us right about in this ballpark, somewhere right in here. So a little bit lower than the 37.5. So we have some room there. Ideally, Chipotle rallies from here and like we make money on both of them. That would be best case scenario. Worst case scenario is Chipotle continues down beyond 36.7 or whatever we said it was. And we lose out on the short put spread. The short put, because it's not defined risk, we can just roll it into perpetuity. So we can continue rolling it out each month. We can continue to receive credit on it. So I'm not so much worried about the short put, but I think there is an opportunity here for us to fix this position and make a little money on it at the same time. Look forward to tracking that one and seeing how that one plays out over the next couple of weeks. Let's go back to the positions tab. We don't have any other positions that have legs in the money, so we'll just breeze on over to the DTE column. Everything is 38 DTE. So in 17 days, we're going to make some decisions on some of these trades and decide, do we roll them out? Do we close them for a winner? Do we close them as a loss? Like, how do we want to handle those? If we move over to the IVR tab, we don't have any IVR under 20 on any of these positions. So nothing we have to do there. If we take a look at the earnings tab, we have earnings in Pepsi coming up in exactly a month, and then the other two are following, so we don't really have to pay any attention to those. Let's look at our watch list to see if there's any opportunities here for us to open up any new trades for us today. Like, I already opened up that new put in Chipotle Mexican Grill, but let's see if there's, that one's kind of more of a, I don't want to call it like a brand new trade. It is a brand new trade, but I don't want to call it like just, hey, I went out and found this trade. It's more of a defensive brand new trade. Let's look and see if we have any new opportunities here to open up like brand new trades. With the VIX being down, you know, I'm not going to get too aggressive here, but if something just jumps out at me, I will. Rocket companies, we have our watch list filtered to only show 4-star liquidity, sorted by the IVX 5-day change. We have Rocket companies at the top of the list. We're only going to look at these green ones here, and we already have a position in GDX. So let's start at the top here, Rocket, and we're going to take this one out to a short strangle, out to the 38-day cycle. We'll go over here to the table tab. And let's stretch this out. We'll go to the 18 delta, which is a 17 strike on the puts, and we'll go to the 18 delta on the calls, which is the 27 strike. So 17 and 27 for a credit of $1.03. Buying power effect is 1646, which is more than I want to see on here. CVAR is 504, POP 72%, P50 is 85%. I'm kind of okay with this one. The bid-ask spread here is about 4 pennies wide on the put side. On the call side, it's a little bit wider, coming in at about 18 pennies. If I could get this one down, like right here, we're at a penny wide on the 26. So yeah, well, why not? Let's go to the 22 strike, 83 to 86, 3 pennies. So, we could save a little bit here, but I think I'd rather stick around there. Let's take a look at the chart and see what's happening here. We might want to lean towards the short side on this one. Let's go back and look. So if we lean towards the short side, we're a little closer in on the call with the 22 delta. We're a little further out with the 19 delta. We could even come down here to the 12 delta on the put side. So going 1626 gives us a little short delta, minus 9.35. with a buying power effect of 1568.50. However, we're only collecting 88 cents. So, I don't know. If we bring that back up to the 19 delta, and let's say we go to the 25 delta, we can collect $1.22. We can get $1 here at 16 and 25, which gives us 12 delta. 25 delta does still give us short delta. We're just a little closer. POP 73, P50, 85, buying power effect is 1570, collecting $1. Let's just kind of go look at this chart again with a little context. 16 and 25, where does that put us here? 16 puts us here, and 25 puts us way up here. 16 and 25. Let me grab the tool here. We'll do price level. We'll drop that in. So let's say 16 right there. And then we'll go add another one. And that one's going to be a 25. Drag this over so you can see this. 25. Now this isn't our break evens, this is our strikes, but that's okay. Our break evens are actually going to be a little wider than that. So 16 and 25, that's kind of the range we're looking at here. Now, I'm almost wanting to pull this 25 in, and let's say like maybe more like 23, and see if we can pull our puts down to 14. Let's see what that does. So if we go 23 and we go 14, really gives us some short delta, like almost 30 short delta, $1.12, 74 on pop, 87 on P50. I don't hate this. If we came up here and said 24.15, lowers the delta just a little bit. Let's update that and see what that looks like. 24 and then 15. All right. Puts us right around in here. Maybe that's a little better. We'll see. I'm just not so excited about the buying power effect on this one. CWAR is a little low. What if we buy the wings? So let's say we buy the $5 here, and we buy the $5 here. Then we're only collecting 65 cents. We bring our buying power down a little bit lower. Let's go $10. $10. Still only 80 cents. I don't know. Like, as much as I'm trying to get this trade on and trying to get something on today, I just don't think that one's going to work out for me. It's like either with the short strangle, our buying power reduction is too high, and if we try to spread off some of the risk by buying the wings, then our credit is too low. So I'm going to pass on that one. I'm not desperate on today to put a trade on. Let's go check out Dr. Pepper, Keurig Dr. Pepper. Short strangle. This is one I don't think I've traded before. We'll go to the 22 and the 18. Yeah, it's just not a premium there. We'll go to CNC. I think we had a position on CNC recently. Expiration 30, 38. Yep, 38. Not very good strikes here. 22, 27, $1.59, 309, 20, 64 on the pop, 75 P50. 5 pennies wide on the bid ask. These aren't the greatest strikes, but this one doesn't set up too bad. Let's go take a look at CNC on the chart to get some context. 27.5 and 35 is where we're at. 27.5 puts us right about here. 35 puts us here. I don't know. 27.5. I wonder if we can bring that put out a little further, the 25, what that does to us. Come down here to 25 on the put. Where did we say our call was? 35. 25, 35. Yeah, what the heck. Ivy rank 67.5 in CNC. Not bad. Not bad. I think I'll route this one. 5 pennies here, 5 pennies here. We're outside of the expected move. We have earnings coming up on October 24th, which is about a month and a half away. $1.19. Let's run it. Like, buying power effect of 309. You almost can't go wrong with that. All right, so we're working an order at $1.19 credit. We're going to have to lower that credit to $1.18, and hopefully we get filled. And we did not get filled. And let's drop that one again to $1.18. What did we have? Did we have 18 before? I don't remember, but let's go to $1.17. All right, $1.17 CNC, still not filled. Let's go to $1.16. Is this the magic price? CNC, we're filled in a short strangle for $1.16 in October. All right, so let's go back to our positions tab. We're going to group these by as a strangle. We'll also select both of these, close for profit at 58 cents. So we're targeting $58 here on a one lot. We're going to go ahead and route that good till cancel order and let it rest. All right, let's go back to the watch list to see if there's any other opportunities here. We have EWZ, typically doesn't have premium, a sufficient amount of premium. Let's take a look here, 13, 13, 17, 24, 29, no premium there. Let's go back to LQD. We already know how that one plays out. Let's turn off the 4-star, turn on the 3-star, and let's take a look. We have BE, position in BE already. IREN, this is one I'm not sure I'm familiar with, but let's take a look at it. Let's trade here. We'll set up a short strangle and the 38-day. Let's go down to the 18 delta on the puts and 18 delta on the calls. Collecting 201. The bid ask is a little wide here. If we go to it's about the 12 delta has 5 pennies wide. And the width on the call side is insane. I say that. I was looking at the wrong columns. I was looking at the delta and the bid. I was like 20 and 70. Let's look at the bid ask here. 50, 56, 65. What's it doing? It's spiking, so we need to get short. You know what? Let's try this as a vertical call spread. What did I just do? Short call spread. So we'll bring that one down to, let's make it $5 wide. So yeah, if we want to get short, we're trading up here. If we want to get short, 31, 36, $5 wide, 122 credit, 64 pop, 72 P50 with a buying power effect of 379. A max loss is 378. Yeah, let's route this one. I like this one. Let's make sure our bid, gosh, the bid ask is horrible again. If we go to these strikes, does it make it any better? No, not really. There's some width there that I'm not super excited about. $7 pennies wide here on a $3. I mean, if we're going to go for a $3, let's go here. I don't like any of this. Bid ask spreads. I'm trying to make something happen when I shouldn't. Let's look at United Health. Short strangle. I should know better than to spend too much time on these 3 stars. 19 delta, 20 delta, $10, $9.75, 485, 10, 465, 30. I really don't think I want to get into this, but let's try a $10 iron condor here. It's not that bad. So let's go to the 15 delta on the call side, 13 on the put, $1.96, 804. Let's keep walking this one down a bit. $1.34. Let's go to the 9 delta on the call side. We're at the 9 delta on the put side. $1.14. Credit pops 81, P50s 80, 889. With our strikes at 290 and 420. What's going on here? 290 is here and 420 is over here. Yeah, I don't know. I don't know about that one. I don't feel comfortable with that one either. I'm picky today. MP trade. Let's go to the, why is it showing all this extra stuff? Short strangle. Let's go out 38 days. Horrible strikes. But we're getting to the 11 delta and the 13 delta, collecting $1.67, pop of 80, P90, 89, buying power effects 633. With 20 pennies wide on the put side and 15 pennies wide on call side. Move this here to get it more like 15 pennies wide and 5 pennies wide, collecting 319, 55 and 80. What's this thing doing? So we're at 55 here and 80 here. We could go along for the ride. 319, it might give us something exciting to work with. But I don't know if I need that. And then Barrick, I don't think Barrick pans out. I think we're going to end up with one short put for the day. Nope, nothing to brag about here. Okay, we ended up with one short put in Chipotle. Oh, no, we had CNC. So we had a short put in Chipotle that we sold for 80 cents. We had short strangle in CNC for $1.16 that we put on today. Yeah, well, that's it. Check back tomorrow for another episode of Decay Factor. Thanks for watching.